Well, on top of struggling with the influx of refugees, Greece is also trying to cope with a major economic crisis. The Greek parliament has amended its budget in exchange for much-needed debt relief. By cutting expenses and raising taxes, Athens hopes to convince Eurozone finance ministers to sign off on bailout payments when they meet in Brussels on Tuesday. Well, let's take a closer look at the measures. The Greek government plans to raise $2 billion through tax increases. The plan includes the introduction of taxes on coffee, e-cigarettes, pay TV and hotels. Property taxes are also going up. Greeks will pay more taxes on heating oil, gambling, luxury goods and alcohol. Greece's pension scheme will be standardised with a national pension of $437 a month. Low-income pensioners will no longer get stipends. Now, most of the country's state-owned assets, including equity stakes in banks, public utilities and listed companies, as well as thousands of real estate holdings, will be transferred to an independent privatisation fund so that they can be sold. Well, those are the plans that the current Finance Minister of Greece hopes will satisfy the EU. Now let's get some reaction from someone who used to hold the same post. Gikas Hardouvelis joins us now live. Thank you very much for your time. First things first, let's talk about this meeting in Brussels. What exactly are you expecting to come out of it?
Well, I expect that there will be a compromise between the lenders and money will be given. The review will close and enough money will be given so that Greece will be able to pay its debts over the next 3 months. And mind you, there is a huge payment to the ECB in July that has to be paid. A country cannot default on the European Central Bank because this has implications on how much the bank can lend to its domestic banks. So it's important that the Greeks get the money, and it's also important that they get some extra cash so that the state can pay what it owns to the private sector. It owns about 7 billion euros, and that's a lot of money. If they do get some of that money, then money will sort of enter the private sector and perhaps the economy can stabilize.
You mentioned there that you think there'll be a compromise between the lenders. You also mentioned how much Greece actually owes. Can you just explain to us the fact that the European Union or the European leaders in the IMF, for example, they have fundamental differences on how they view Greece's economic problems. Can you just explain to us what they are?
Yes, I think the Europeans are looking at Greece from a political point of view. They sort of want to forget about the Greek issue, and they want essentially, Greece does not represent a contagion anymore, so they are not paying attention to the economics of the country. The IMF looks at the long run, they look at the fundamentals, they understand that after the new leftist government, the growth prospects are much lower, and they know that Greece needs some fiscal space, and it needs to follow a better fiscal mix. And also that also requires that the Europeans provide more debt relief than they are willing to provide. So there is a stalemate between the lenders. The IMF claiming Greece needs more debt relief, the Europeans refusing to give more debt relief because this would force them to go back to their parliaments and ask for more help for the Greeks. And I think they are kind of fed up. They're not willing at this point to do it.
So what will the compromise between those lenders look like, do you think?
Most likely, they will push aside the issue of the debt relief, and they will focus on giving cash so the country can move forward for the next 3-4 months. And I think real decisions on debt relief cannot take place before the German elections in 2017. For the period of a year and a half now, we're going to see a stalemate on this issue, I believe. No long-run solution for the debt issue.
Can we just finally talk about the situation domestically in Greece? As you mentioned, there's a left-wing government, the Syriza government. These austerity measures that are being implemented sort of go against what they were elected to do. What's the political situation like? What impact is all this having on Greece domestically?
Yeah, this is very bad because remember back in 2014, Greece had already stabilized and growth had come back, and we were really rolling for growth rates of 4%, which are very big for a European country. But the leftist government kind of scared the population. It brought capital controls. It brought back a recession, and now it has to abide by the fiscal targets that the Europeans are imposing. And so it's following now a contractionary fiscal policy, and it's all coming from taxes. So this implies that companies want to leave, the youth wants to leave. No one wants to pay taxes of 70%. I mean, it's amazing. Instead of cutting expenses, they decided to essentially hit the middle class with more taxes, and that's affecting the long-run growth of the country.
Okay, Gikas Hardouvelis, thank you very much for your time. Much appreciated.